So today I really want to talk about how to get a credit card with no job. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you're to ask me. If you are doing as great as I am, go grab a cup of coffee or a tea or vodka and let's roll. In today's conversation, I want to talk to you about how to get a credit card while being unemployed. Now, one thing I want to say here is that a credit card is necessary for many of today's transactions, especially if you want to rent a car or book a hotel. Getting a credit card without a job is kind of risky though, particularly if you don't have any income. However, there are some consumers who do have a regular steady income, just not income from a job. So I'm going to give you 5 steps in helping you getting a credit card with no job. The first step is you need to understand credit card employment requirements. The thing here is that having a job for that matter, not a real job, just a job, having a job is not a credit card requirement. Many credit card applications only ask for generic occupation or employment or income information. So you may simply have to choose whether you are a student, government worker, homemaker, self-employed worker, or unemployed. Some applications may ask the name of your employer, but they would allow you to enter none if you don't have an employer. So you may find that some applications do not ask for employer information at all. So the bottom line here is that information is not really information. Employment information is not critical. If employment data is requested on the credit card application, you are legally required to answer the information honestly. Very important. No lie on a credit card application. Never. So if employment is not important, what is important? Income. Income is more important. Even if you don't have to enter employment information, the credit card application will require you to list your total annual income. You can include alimony, child support, and or any other income you want to be considered for repaying your credit card balance. College students may be able to include any financial aid left after covering their tuition in their income on a credit card application. To calculate your total annual income, you just have to multiply income by 52. You have to multiply your weekly income, that is, by 52. You can multiply your bi-monthly income by 24. You can multiply income you receive every other week by 26. Or you can multiply your monthly income by 12. It's as simple as that. I want to quickly elaborate on listing income on your application. This is an important element because, again, the credit card issuer is only concerned about you repaying him or her back. They don't care about whether you have a job. As long as you have a legit source of income and you have a you have regular cash inflows, that's all they care about in the first place. So under the Credit Card Accountability, Responsibility and Disclosure Act of 2009, card issuers are required to consider an applicant's ability to make payments before opening a new credit card account for them. So when deciding whether to approve someone for a new credit card, the issuer will likely ask them about debts and other financial obligations. And this is important because debts and other financial obligations have a direct correlation to the cash inflows and cash outflows, aka the net cash flows for the month. So the credit card issuer will typically also ask for the applicant's total annual income. So aside from a full or part-time job, that income could include things like earned income from self-employment. So if you own or run a business or a farm, you can count those earnings on a credit card application. Money you earn from independent jobs like freelance projects and content work could also count as a self-employment income. Income is income. You can also indicate shared household income. So this could include income your spouse or partners earns. I'll speak at length about this in the next section. You can also indicate unemployment benefits. So if you lost your job and you are receiving unemployment payments, you can list it on your application. That makes sense because you will be paying taxes anyway on your unemployment income. So it makes sense to list it as income. And you also can indicate retirement income. So this may include distributions from a retirement account or payments from Social Security. I would say generally, what experts agree on is that if you can actually treat a source of cash inflow as income on your personal tax return, you can also treat the same source of liquidity as income on your credit card application. So if you can consider it income for tax purposes, the same applies for credit card applications. It's very important to kind of make that analogy here. Now, I want to quickly also talk about, so number one, understand credit card employment requirements. Number two, list someone else's income. So the whole idea here is that if you want to get a credit card with no job, and you need to hit a certain threshold in terms of income, you can actually list someone else's income. If you are an adult over age 21, you can use someone else's income on your credit card application if you can reasonably expect to have access to that income to pay your bills. This is a key phrase here. You need to be able to reasonably expect to have access to that income to pay your bills. If not, you can't list that income as income. For example, if your spouse regularly transfers a certain amount of money to your account, you can actually use the amounts that's transferred as your income. Or if you have shared an account with someone else and have access to all the funds, you can use the regular deposits as your income. Again, it's all about having access to that money. All right, you cannot have limited or restricted access to the money and count it as income. It doesn't work. You cannot use someone else's income if that person does not regularly transfer money to you and you don't have joint access to an account with them. And among the many factors that can affect your credit application, your income, and specifically your debt to income ratio, your DTI, is one of the most important. Naturally, one thing we have seen in our research is that card issuers are more likely to loan you money if they think you can pay it back. So reporting a higher income will increase naturally your chances of being approved. Fortunately, you may be able to include income on an application beyond what you earn personally. And that's fantastic. And it wasn't always that way though, actually, because the rules have changed several times over the past decades, thanks to the Card Act of 2009 that I was just referring to earlier, as well as later amendments made by the Consumer Financial Protection Bureau, the CFPB, in 2013. So the law says that if you are 21 or older, then credit card issuers may take income from a spouse or a partner into account, so long as you have a reasonable expectation of accessing the funds in order to meet your financial obligations. All right. Now, if you are under 21, then you can only report your own personal income. All right. So basically what I'm trying to say here is that this provision in the law allows lenders to look at your complete financial picture, which makes a lot of sense because, say, if you earn, say, $20,000 annually and you share finances with your spouse who earns, say, $80,000, then you are more creditworthy than an individual who earns $50K, assuming all else is equal, right? Because reporting a combined income of $100,000 represents your ability to repay more accurately than reporting an income of 20 grand. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Story Kiwi Show. We are still having a conversation about how to get a credit card with no job. Let's go to number 3. So number 1, understand credit card employment requirements. Number 2, list someone else's income. Number 3, you want to become an authorized user. What is that? Let's dig a little deeper here. Another option to access credit is to become an authorized user on a trusted friend's or family member's credit card account. This is totally different from a cosigner. Okay, I'm going to explain cosigner, the concept of cosigner later on. But right now, an authorized user means that you have access to that person's account. You likely get your own credit card that's linked to their existing account. So think of it as a secondary. You are the secondary user. You're not a primary user. You're a secondary or tertiary user, depending on how many people are linked to that primary account. So the thing you have to understand here is that if you are an authorized user, the primary account holder is ultimately responsible for making payments. So some card issuers report authorized users to the credit bureaus. That means any account activity could impact both cardholders' credit scores. And this is why we always say throughout all our shows that we advise viewers to have some kind of responsibility, to hold to be responsible when using the cards, because responsible credit card use may help build the authorized user's credit, but things like missed payments could have the opposite effect. So before becoming an authorized user, it's always a great idea to have a discussion about spending limits and how you will each handle payments. And the one thing we have seen in our research is that it's kind of advisable for parents who have teenagers to start actually to start training them in terms of credit worthiness by adding their teenage son or daughter to their card as an authorized user. And you can have a conversation with your son or daughter about the limits, about the spending patterns. But it's kind of cool to actually include that person if he or she is 17 or 18. You just want to tie that person to your card as the secondary user, as an authorized user, ASAP. That way, he or she can learn. He'll learn about budgeting, personal finance. Can learn about monitoring expenses and all that kind of stuff. And the credit card issuers are very adamant at making sure that the authorized user, if you're lucky, and there are a lot of credit cards out there that would allow you to actually add not only an authorized user, but they will also report the transactional history, the credit history of that authorized user onto the authorized user's credit report. So that's pretty cool. In addition to, of course, reporting the transactional history to the primary account holder's credit history also. So you're getting the best of both worlds. Number 4, folks, consider a cosigner. If you want to get a job but you are unemployed, you need to understand credit card employment requirements. You need to list someone else's income. You can become an authorized user. You can also consider a cosigner. You might be able to ask someone to co-sign your credit card account. So authorized user, the person is secondary cardholder. Having a co-signer means you both are the same. You both are the same level in terms of responsibility for the card. All right. So co-signing for a credit card is one way to help a loved one improve their chances of being approved, especially if they are building or rebuilding their credit. A co-signer could also help the applicant get more favorable terms than he or she might on his or her own. It's all about risk management, right, folks? There is some risk involved for the co-signer here, though. Ultimately, you are responsible for making the credit card payments. And God forbid, missing those payments could have a negative impact on your credit scores. But if you don't make payments on the account, that responsibility automatically falls to the co-signer. Okay, so you want to ask the lender that you are interested in, and you want to ask them whether or not they accept co-signers, because access may vary depending on the lender. But what we have seen in our research is that generally a co-signer does not have access to the account, does not receive monthly statements, and does not get a card of their own. But account activity may be listed on the co-signer's credit reports, which means it could impact their credit scores. That's what I was just referring to earlier in terms of parallel level of responsibility in terms of the transactional history. So before you want to choose a co-signer, before you want to go this route, you want to consider talking to your co-signer about how you plan to make payments. It is important to have an honest conversation, an honest discussion with a co-signer, so that if someone with a good credit history is trying to help you out by co-signing a credit card or with you, the least you can do is by being forthcoming. The least you can do is being forthcoming and explaining to the person everything you intend to do, and agreeing with the person in terms of how the cars will be used, the discipline you need to have in terms of making the minimum or the full payments every month, as well as the overall level of expenditures on the card. The last option you can try if you want to get a credit card while unemployed is to try a secured credit card. This, of course, means that you might have a little bit of cash and you're just trying to build your credit or rebuild your credit while you are out of work. So, while secured credit card applications will often ask about your employment and income, you're more likely to be approved for one of those credit cards because you are making, in effect, a security deposit as collateral. In other words, the bank is not really losing anything. The bank's risk here is nil. They're actually doing you a favor and charging you for it. Okay, let me give you an example. If you take the Capital One secured MasterCard, with that card, you can actually make a security deposit as low as $49 for a $200 credit limit, depending on your credit worthiness. Some cards will actually give you a credit limit that is higher than your deposit, but most cards will actually give you a credit limits, an initial credit limit that is equal to the deposit you have made. Okay, but with the Capital One Secure MasterCard, for example, the higher your security deposit, the higher your credit limit will be. Okay, and others may pay rewards on your credit card purchases. So before you apply for a credit card without first having a job, you want to carefully consider your ability to repay the credit card balances. So because if you are approved for a credit card and you don't have the means to repay your charges, guess what? You face credit troubles. Things like late payments, charge-offs, and debt collections. You know what? Those things can actually hamper your credit worthiness down the road, and those things actually stem from your ability to repay, actually. So a secured card can be a way to get access to credit even if you have limited income. So to open a secured credit card account, the process is pretty straightforward. You need to put down a refundable security deposit as collateral, and that deposit protects the credit card issuer if you fall behind on payments, and the issuer decides the minimum you need to put down, and it's usually equal to your credit limit, as I was just telling you earlier. And some issuers will increase your credit limit if you make a larger security deposit or show responsible credit use over time. For example, the Capital One Secured MasterCard. And while it may be challenging to temporarily part with your own money, this can be a great way to help improve your credit profile. Just remember to make sure the issuer reports your credit activity to the credit bureaus. I'm talking about Experian, TransUnion, and Equifax. All right, folks, this was it for today's conversation. This was a quick convo about how to get a credit card with no job, and I gave you 5 options you can choose. You can choose either one of them, or you can use a combo of those 5 steps. So first, understand credit card employment requirements. Number 2, you want to list someone else's income. You want to become an authorized user. You want to consider a cosigner. And last but not the least, you want to try a secured credit card. I will see you next time. Thank you so much for your attention. Until next time, remember, stay marvelous.